Nasdaq reporting its second quarter results just this morning. Quarterly profit of $1.22 per share. Beats consensus by 2 cents. And joining us right now to break down the numbers, you're really like, we're in your home. So Adena Friedman is here, CEO of the Nasdaq. Of course, we are at the Nasdaq market site right now. So it's nice to see you.
It's nice to see you, too.
Want to talk earnings, want to talk big tech, and want to talk IPOs. Why don't we do earnings real quick, but then I want to get to sort of where we really are, because I think there's a lot of concern, especially this morning, given what we heard from the Department of Justice yesterday. In terms of the earnings piece of this, what is your expectation for the rest of the, we know what happened. I want to know what your expectations are for the rest of the year.
Well, when we break down our results, we're very pleased to have still 8% growth in our non-trading businesses. And when we look at the overall performance of our business, it's really coming from demand for our technology, demand for our index products, and our data and analytics products, as well as a very strong IPO market. So we're really, really pleased with how our business continues to perform. And I would say that those demand characteristics we see continuing as we go through the year.
We always overthink the IPO piece.
Well, in terms of the IPOs, the corporate services business generally is driven by a lot of different things, but certainly IPOs do help in terms of creating growth in our overall number of issuers, which then, of course, create recurring revenue for us. Are
you a believer, given this news from the Department of Justice? You have a lot of some of these are on your exchange, these companies, A. B, there's a lot of smaller companies that are trying to compete with these guys who are on your exchange or want to be on your exchange. What do you think is going to happen here?
Well, I think the first thing to note is that there are hundreds, if not over 1,000, technology companies listed in the United States today. And when we look at the overall performance of tech companies so far this year, it's over 20%. And when we look at new companies coming out onto the market, technology companies that are coming, which are not those big tech companies, but companies that are into the enterprise space or in the consumer space, their performance so far this year is about over 40%. But generally speaking, the technology companies have a higher multiple overall than the rest of the S&P. So we really have to look at the overall industry and realize that the opportunity set for technology companies in the United States and in the world continues to be extremely strong.
That's an argument against what some politicians are saying at this point.
Well, I think that it's a very healthy competitive landscape in general, and there's obviously technology can be applied in many different parts of the economy, both enterprise as well as consumer.
So here's the part that I'm trying to understand. It's either a healthy competitive market or it's not. And I would bet money that there's a lot of technology companies actually on your own exchange, smaller ones, smaller than the biggies, who are going to be the ones calling the Department of Justice in the next 48 hours. No?
Well, all I can say is I think that we've got a very, very vibrant technology industry here in the United States. The question is, and those large technology companies have done amazing things to bring accessibility to people around the world, to make it so that we're more connected around the world, and to make commerce more available around the world. So there are a lot of positive effects that those companies have had as they've grown. Now that they've gotten as big as they've gotten, they have a responsibility to society as well. And I think that's something that they're working through as to what is the responsibility that they have to manage their technology in the face of continued growth at the same time, and they are working with the government on that. But I also believe that that's the purpose of the industry itself is huge. It's technology being applied to every industry around the world now, and therefore the opportunity set in tech continues to be incredibly large, and regardless of what part of the tech industry you're in.
Hey, Adena, just to go back to your earnings for a moment, you talked about how you're really pushing things in terms of selling your information technology services. Sports betting is one of the places you picked up on that. Can you tell us a little bit about that?
Sure. So our technology is really applicable across other industries as well. So when you look at real-time price discovery and matching technologies, as well as some very complex types of betting technologies. Those things are applicable whether you're in the capital markets, you're in insurance, you're in industrials, or you're in betting and sports. And so we have applied our technology now to a new sports betting company who wants to try to create almost like a fantasy soccer type of marketplace, and our technology is applicable to help them create a matching engine for that.
Real quick on the IPO front, what do you make of this argument that all these companies stayed private too long, and that there's too much private money out there?
So I think it's hard to say there's too much private money out there, but there is a lot of private money out there. And companies now have a very, very vibrant choice of staying private for a very long time. A part of that the reason for that is that the public markets put an enormous amount of obligation on companies when they want to come in and access public investors. So we've been advocating for 2 years on trying to make sure we make some changes there to make the public markets more attractive.
Thank you so much.
Thank you.